Airbnb just released their latest earnings report, a beat across the board for this quarter. The problem here, again, because the stock is down 8% or so at the time of making this video, the problem was with regards to guidance. More on that in just a second. Right now, as I said, Airbnb is down 8.19%, had a market cap before they reported of around $100 billion. If you look at valuation, it is cheaper than its 5-year mean. You might say it doesn't look expensive or it doesn't look cheap, depending on what metric you're looking at. It was definitely not the cheapest stock out there, as we've seen with Shopify, for example. Of course, Shopify was already a bit more expensive. Shopify also got punished heavily despite having a good quarter. Just when you're priced to perfection and you slightly miss or even just meet, usually that's not enough when things are valued at a premium. Same could be said here with Airbnb, but still I value this as an incredible, well-run business, growth and profitable. And so before jumping into the numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. If there are any other companies that recently released their earnings report and we haven't covered that yet, or it's not on schedule, let me know down in the comment section below. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first of all, by the way, this one, the first page of the shareholder letter, this is a room now that you can actually sleep in. This is part of Airbnb's icons. Truly a great new addition to the Airbnb offering. More on that a bit later. So revenue reached $2.14 billion, up 18% year over year. Net income, $264 million with a net income margin of 12%. Adjusted EBITDA, $424 million with a 20% adjusted EBITDA margin. Free cash flow, $1.9 billion, up 21% year over year. With regards to key business metrics, GBV or gross booking value, $22.9 billion, that's up 12% year over year. With regards to night and experience booked, up 9.5% year over year, that came in at 132.6 million. Now, let's dive a little bit deeper, more specifically with expanding beyond their core offering. So they remain focused on accelerating growth in more places around the world, while also building towards the future of Airbnb. Expanding beyond our core business will be a multi-year journey, and we've already started laying the foundation. Last week, we introduced Icons, a new category of extraordinary experiences hosted by the greatest names in music, film, television, art, sports, and more. Icons mark an important next step in helping people understand that Airbnb offers more than accommodations. This will be critical as we begin to expand our offerings in the coming years. In my opinion, this will open up so many doors for Airbnb. Not only is this great for marketing, but this is marketing that will pay for itself. I mean, imagine in the future, this is basically what I wanted to see with Airbnb experiences. Airbnb experiences is something that existed already before, right? You go to a host and you can add an experience, maybe cooking or something else, whatever. But this, the Icons one, although right now pretty exclusive, pretty new, of course it's going to grow in the future, it could be their own version of I wouldn't call it a theme park, but a theme park-like experience. Why am I saying this? Well, if we scroll down, we can actually see a couple of those things, right? You can stay in the Up House. Of course, I don't think you're going to fly with balloons, but it looks exactly like the house in Up. You can spend the night in the Ferrari Museum. You can spend the night in the X Mansion. You can go VIP with Kevin Hart. Plenty of other offerings as well, and this is just the start. I mean, the CEO did ask on X for ideas for future builds. If you go and read the comments, I mean, if they do build even 1% of what was mentioned in the comments, things are going to get quite wild. Up next, in the quarter, they repurchased $740 million of their own stock. They have a remaining authorization to purchase up to $6 billion of their Class A common stock. So that's great. Also fight dilution. Then, with regards to mobile downloads, those are accelerating. I don't think this was mentioned before. So in the United States, Airbnb app downloads increased 60% in Q1 compared to the same period last year. Global nights booked through our mobile app increased 21% year over year, representing 54% of total nights booked during the quarter, up from 49% in the same quarter last year. With regards to what is going to happen in the next coming months, next coming quarters, of course, if you know, in the summer, plenty of sporting events, especially in Europe. You've got the Olympic Games in Paris, you've got the European Championship for football, American call it soccer, in Germany. So they say here that in Europe, they say that the dates for the Olympic Games are already over 5 times higher than they were in Paris the same time a year ago. In Germany, they're also seeing a similar trend for the Euro Cup this summer, with nearly double the number of nights booked compared to the same period last year. So I do expect that quarter to be quite a good one for Airbnb. With regards to trip lengths, so longer stays of 28 days or more accounted for 17% of gross night booked compared to 18% same quarter last year. They also made a couple of updates, and they've seen stronger growth of longer duration trips, with Q1 2024 nights booked for long-term stays of 3 months or longer increasing nearly 25% year over year. ADR, or average daily rates, was $173 in Q1, increasing 3% compared to Q1 2023. With regards to supply, they ended Q1 2024 with their highest number of active listings yet. Active listings grew 15% in the quarter compared to a year ago. Oh, and by the way, just look at this free cash flow machine, right? $4.2 billion trailing 12 months free cash flow with a 41% margin. Truly incredible. And so last 2 things here with regards to balance sheet and cash flow. As of March 31st, 2024, they had $11.1 billion of cash and cash equivalents, short-term investments, and restricted cash. Of course, right now with high interest rates, they're probably making quite a lot of money thanks to that. Then with regards to outlook. So in Q2, they expect to deliver revenue of $2.68 billion to $2.74 billion, which represents around 8 to 10% year-over-year growth. Now, as they previewed in their outlook last quarter, year-over-year revenue growth in Q2 will face significant sequential headwinds, primarily due to the timing of the Easter holiday, the inclusion of leap day in Q1, and the impact of FX rate changes. Looking ahead to the peak summer travel season, they are already experiencing robust demand for travel around international events, such as the Olympics and the Euro Cup. Due in part to the strength of their summer backlog, they expect year-over-year revenue growth to accelerate in Q3 compared to Q2 of this year. And so with regards to the guidance, they missed Q2 revenue estimate by around 1%, roughly met EBITDA margin, and reiterated 2024 EBITDA margin guidance, as you see right here. So in Q2 2024, they expect adjusted EBITDA to be flat to up on a nominal basis, but down on an adjusted EBITDA margin basis relative to Q2 2023. For the full year 2024, consistent with their prior guidance, they expect to grow adjusted EBITDA on a nominal basis and to deliver an adjusted EBITDA margin of at least 35%, providing them flexibility to invest in incremental growth opportunities over the course of the year. And so right now, if we look at this stock, I think it's in a perfect situation right now for those that wanted to increase their position but wanted to pay a bit less. So you get a small correction here, which right now the stock will probably sit just over the 200-day moving average. RSI is also going to be a bit lower toward maybe a neutral area, which in my opinion, if it holds, it's probably going to be a good area to add. I'll be looking to add a little bit to that position because I do still think, despite maybe higher than expected valuation, let's say, right? The PEs, the EV to EBITDA is a bit higher than a lot of other companies out there, but not a lot of companies out there can generate this amount of free cash flow each and every quarter. Not a lot of companies do have that brand recognition, that, let's say, term, right? Airbnb, even if it's not an Airbnb, you are calling it an Airbnb. It's like Google it, right? It's the same thing basically. So I do think that they're well positioned for years and years ahead, and them actually expanding the core offering, or this is just the start, was a no-brainer. We've been talking about that for quite a while. Very excited to see what happens next with Airbnb, one of my favorite companies in my portfolio. So that will be it for this video. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.